Hey traders, today is Tuesday, July 14th, and I'm Michael Boutros, Senior Market Analyst with StoneX, here for a quick multi-time frame look at the British pound. We're attempting to snap a 2-week winning streak. We rallied nearly 2.4% off the June low, with that rally fizzling out last week right ahead of resistance. We're about 0.8% off the highs right now. It failed to close above the 52-week moving average, comes in right around 34.06, just higher as lateral resistance at 134.60 into 134.74. That's the objective 618 retracement from the decline off the highs we made in April, and the objective yearly open. Not Mike Boutros' opinion, not Forex.com's opinion, fact. So that level, we fizzled out right ahead of it last week, and we're getting a little bit of a pullback here. The May low close comes in at 33.26. That's initial support on the weekly chart, and we're looking for potential reaction here. If this rally is faltering ahead of that level, we really should see the long side limited in the near term. Here's what it looks like on the daily chart. So we've been tracking this really nice descending pitchfork formation off of the May highs, been very well received. The lower parallel catching that decline last week, the spike low coming right into the May and August lows of 2025. You had the 100% extension from the decline off the highs you made back in May. That rebound, again, nearly 2.4% right off the low, fizzled out right at the upper parallel last week. And while we did note a couple of daily closes above the 200-day moving average, the weekly could not clear the 52-week moving average. So you're seeing that vulnerability on the long side near term in the British pound. Here's what it looks like on the 4-hour chart. So within the confines of that declining formation was this near-term ascending pitchfork just off the lows from June. You could see that rally failed last week right at the upper parallel. And here we are yesterday now trying to break near-term uptrend support. So the weekly opening range is taking shape right below a 618 retracement of that near-term decline off the high. That's initial resistance, 34.10. Keep in mind the 200-day moving average is right at 34 proper at this point. So resistance right there. Support at 33.32 into 33.26. You're looking at the May and low close again. The 38.2 retracement of just the near-term ascent off that June low, and also the 100% extension of just the near-term decline from last week's high. 1, 2, 3. All of that converges on 33.26, 33.32. That's the break you need to threaten resumption of the downtrend. You'd be looking for the May low at 33 proper. Again, the 618 of the rally comes in right at the objective monthly open for July, and that gives you 32.60 into 32.59. So that level converges on the median line, and a break below there would be the conviction for the next major set of decline for the British pound. 34.10 resistance. Key resistance doesn't change. Broader bearish invalidation remains with the yearly open, the February low day close, and the 618 retracement of the entire decline off the highs from April. That gives you 34.60 into 34.74. A break and a close above this region is needed to invalidate that May downtrend and suggest a more significant lows in place and the potential for a larger reversal in trend. So the stage is set. The battle lines are clear. If the British pound is heading lower on this stretch, the weekly range high, the 200-day moving average, the 618 retracement all suggest we shouldn't see anything above 34.10. You would need a confirmed daily close below 33.26, again, to open up the potential for a next leg lower in the British pound. You're pretty limited as far as sterling data or UK data is concerned this week. The focus is going to be today's CPI print. We are expecting June CPI to come in considerably softer on the headline read from 4.2% to 3.8% core, slight downtick from 2.9 to 2.8%. Tomorrow, we get Fed Warsh's first congressional testimony. And so on the back of this CPI print, we get another commentary, potential for a commentary from Warsh tomorrow. PPI figures are on tap tomorrow, and then we get retail sales into Thursday. So the event risk is really going to be mostly on the side of the US dollar. You do have some comments from Governor Bailey today to be aware of, but that CPI is pretty much going to take the major focus. We'll try to keep you updated as always on MB Forex. Till then, best of luck trading. We'll see you tomorrow. Cheers.